Did you know there's a way to invest in the world's biggest companies with just a few dollars? You don't need to be a financial whiz or spend hours researching individual stocks. There's a tool that allows you to diversify, reduce risks, and make your money grow smartly. ETFs. In this video, I'm going to explain what they are, how they work, and most importantly, how you can use them to grow your wealth from scratch. Get ready because this information could be your first step towards financial freedom. Let's get right to it. What is an ETF? First, let's understand what exactly an ETF is. And don't worry, I'll explain it in a simple way. An ETF, or exchange-traded fund, is like a basket that contains a variety of financial assets, stocks, bonds, commodities, or even a mix of them. The interesting thing is that you can buy and sell this basket on the stock market as if it were a single stock. Practical example. Imagine you want to buy fruits, apples, bananas, strawberries, and grapes. You could go to the store and buy them one by one, but it would be more expensive and more complicated. Instead, you buy a basket that already includes all those fruits. That basket is the ETF. It allows you to have a little bit of everything with a single purchase, and if the price of the fruit goes up, the value of your basket goes up too. Benefit. This means that by investing in an ETF, you are not putting all your eggs in one basket. You are investing in several assets, which significantly reduces risk. It is ideal for beginners because it simplifies the process and gives you immediate exposure to different sectors or markets. Now that you know what an ETF is, let's explore the reasons why they have become one of investors' favorite tools. Why invest in ETFs? ETFs aren't popular just because. There are very clear reasons why both beginners and experts prefer them. Let's go over 3 main advantages. Instant diversification. With an ETF, you can invest in multiple assets at the same time. For example, if you buy an ETF that tracks the S&P 500 index, you are automatically investing in the 500 largest companies in the United States. This means that you do not depend on the performance of a single company, but on all of these companies together. If one is in trouble, the others can make up for it. Low costs. Unlike other financial products, ETFs tend to have much lower fees. This is key because, in the long run, costs can eat up a large portion of your earnings. For example, a traditional mutual fund might charge you 2% per year, while an ETF might have a fee of just 0.1%. The difference is huge. Liquidity and flexibility. You can buy or sell an ETF at any time of day while the market is open. This gives you a lot of control over your investment, something you don't always have with other products like mutual funds. Example. Let's say you want to invest in the technology sector. Instead of buying shares of Microsoft, Apple, and Tesla separately, you could opt for an ETF like the QQQ, which includes all of these companies and many more. This saves you time, effort, and gives you exposure to the entire sector instead of relying on a single company. Now that you know why ETFs are so attractive, let's break down how they actually work. ETFs are designed to replicate the behavior of an index or a group of assets. Think of them like a mirror. If the index that an ETF follows goes up, the ETF goes up too. If it goes down, the ETF goes down. For example, SPY is one of the most popular ETFs in the world and tracks the S&P 500 index. This means that if the largest companies in the United States have a good year, SPY will also perform well. But not all ETFs are created equal. There are 2 main types: passive ETFs and active ETFs. Passive ETFs are the most common. These simply track an index, such as the S&P 500 or the MSCI World. Their goal is not to beat the market, but to match it. Active ETFs, on the other hand, are managed by professionals who try to outperform the market by actively selecting the assets that are part of the ETF. Although they have the potential to offer higher returns, they tend to have higher fees. It's like going to an amusement park. The passive ETF is like getting on the roller coaster that already has a fixed route. You know exactly where it will go. The active ETF, on the other hand, is like hiring a guide who tries to take you to the most exciting attractions, but with the risk that he could be wrong. Now that you know how they work, let's talk about something just as important: the risks involved. It is true that ETFs have many advantages, but they are not foolproof. Here are 3 main risks to keep in mind before investing. Market risk. An ETF is tied to the performance of the index or sector it tracks. If the market falls, the value of your ETF will too. For example, if you invest in an ETF that tracks the technology sector and there is a crisis in that sector, your investments will be affected. Concentration risk. Although ETFs offer diversification, some are very focused on specific sectors or regions. For example, an ETF that invests only in renewable energy can be very volatile if there are problems in that sector. Hidden costs. Although ETF fees are low, some have additional costs such as spreads, which are the difference between the buy and sell price. This can affect your profits, especially if you make a lot of transactions. Practical tip: always review the ETF fact sheet, known as the prospectus, before investing. There you will find important details such as fees, the assets it includes, and the index it follows. Now that you know the risks, it's time to take action and learn how you can start investing in ETFs. How to start investing in ETFs? Entering the world of ETFs is easier than you think. Here's a step-by-step process for you to get started today. Choose a broker or investment platform. Look for one that is trustworthy, with low fees and access to a good variety of ETFs. Some popular options are eToro, interactive brokers, or local apps. Make sure they have an easy-to-use interface if you are a beginner. Define your goal. Ask yourself, do I want to invest in the short term or build a portfolio for the long term? If your goal is long term, ETFs that track global indices such as the MSCI World or the S&P 500 are excellent options. Start small. You don't need to be a millionaire to invest. Many brokers allow you to buy fractions of ETFs, which means you could start with as little as $50 or $100. Example: let's say you have $100 and want to invest in the growth of the global market. You could buy an ETF like the Vanguard Total World Stock, VT, which includes thousands of companies around the world. It's like having a little piece of the global economy in your portfolio. Finally, I want to debunk some common myths that might be holding you back from investing in ETFs. Common myths about ETFs. It's normal to have doubts when you start investing, and you've probably heard some myths about ETFs. Let's debunk the most common ones. Myth 1. Investing in ETFs is too risky. This is false. ETFs are less risky than buying individual stocks because they offer you automatic diversification. Myth 2. Only experts can invest in ETFs. Also false. ETFs are precisely designed to be accessible to all types of investors, even if you are starting from scratch. Myth 3. I need a lot of money to invest in ETFs. Totally false. As I mentioned before, you can start with small amounts and do it gradually. As you can see, ETFs are simple, accessible, and effective tools to start investing, even if you are a beginner. Now you know the essentials about ETFs, what they are, how they work, and how they can help you build a solid portfolio. The decision to invest is not about how much money you have, but about taking action today to secure your financial future. ETFs are a powerful, simple, and accessible tool, but as with any path to success, the first step is up to you. So what are you waiting for? Do your research, find an ETF that aligns with your goals, and start with what you have. Remember, every small decision you make today can turn into a big win tomorrow. If you found this information helpful, let me know in the comments. What would be the first ETF you would like to explore, or what is the biggest obstacle holding you back? Like this video if you found it valuable and share it with someone who needs to learn about finance. And, of course, subscribe to keep receiving strategies that will help you build your path to financial freedom. See you in the next video.